Right, good afternoon everybody. Sorry about that. I did actually have the right slides up. The title's not changed. So today it's all about multiple time frame analysis. My name's Stuart. I'm sorry about that. Bit of a hiccup. That's more of a hiccup. It's just me getting things wrong basically. So any questions you have, please email me at webinars@forex. I hope you can all hear me left. Somebody's just left. Sorry, Raj. I'll send you an email afterwards. He obviously couldn't hear me and he's left. That's a shame. Never mind. So it's all about multiple time frames today. One of the key things I talk about in the basics of training. So do what's probable. Keep it simple. Time frames we're going to talk about today. We're going to use some live examples. The slides I've got are a bit complicated for most people, so I'll we go through some live. Do it live. I think it's always a good idea. Look for these pin bars and these conversion, these turns around and what have you. So, but most importantly, with any trading, you got to know yourself. So that's the most important thing. And psychological business. This 80-90% of successful traders say it's between your ears. It's not what listening to guys like me or watching videos or following robots or algos. It's all about knowing yourself. So before we get going, the material here is provided as a general marketing communication and for information purposes only, and does not constitute investment research. Nothing in this communication contains or should be considered investment advice or an investment recommendation or solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not guarantee or reliable indicator of future performance. User acknowledge that any investment in FX and CFD products is characterized by a certain degree of uncertainty, and any investment of this nature involves a high level of risk for which users are solely responsible. We assume no liability for any loss arising from any investment based on the information provided in this communication. And finally, this communication must not be reproduced or further distributed without our prior written permission. So that's the admin out of the way. So today we're going to look at the principles behind multiple time frame analysis, or MTA or MTFA, as you see. It's all about support and resistance, breaking of support and resistance, higher time frames, looking at what's going on in higher time frames, and looking at multiple time frames over the same currency pair, multiple currency pairs, and seeing how it all sort of ties together, gives you a heads up of what might happen and for these lower time frames. So we'll see where we go from there. So some live examples. I use 4 hours, 30 minutes, 1 hour, 15 minutes, whatever combination you want to use. It's effective. Anything down, even 5 minutes and 1 minute charts, because the faster time frames tend to be a heads up for the medium time frame, and then the higher time frame sometimes provides these strong resistance and support levels we're going to talk about. So any questions you have, please go through and put them in the box. Sorry about the beginning, usual disorganization at my end, but there you go. Here we go. So quick rephrase of what multiple time frame analysis is. But before I get going, do any of you use that? Do any of you use multiple time frame analysis? Do you look at the higher time frame to give you a confidence when you're opening a trade, or do you just stick to your 5 minutes or your 1 hour charts or whatever time frames you trade? So anybody actually use these higher and lower time frames to help you trade? And how are you getting on as well, I may ask. Bruce says yes. Sean, I've got lots of Sean's in here today. Sean says yes. Another Sean says no, I've never used it. Anybody else? Or is everybody all new and not too scared to talk to me? Don't be scared to talk to me. Remember, if you've got a question, I always say this as well, if you've got a question, somebody else has probably got it as well. And if you don't understand something, please put it in the question box, because it's not you as a student, it's me as a teacher that's in the wrong if you don't understand it, because if you don't understand it, other people probably don't understand as well. Raj, welcome back. Sorry you disappeared. Sorry about that beginning. It was all about I thought I had the wrong slides up, but I didn't. I actually just had some wrong titles on there. Okay, so quite a few of you actually use it. So let's and what time frames do you guys trade on? Those of you that put yes in the box, what time frames do you use it to trade on? Bruce says 4 hour. Multiple time frame. Somebody else has just said. Okay. All right. I like the 4 hour. I like the 1 hour because you can see it happening. Anything a bit quicker than that gets a bit touchy for me, but even so, it can work on these very small pip levels as well. 4 hour, yeah, 4 hours good. I like 4 hours simply because you can have a day job and still trade 4 hour candles. You can watch the close of the 4 hour chart. You can have a look at it before you go to work. There'll only be one or two that will close while you're at work, and then after hours you can see where they're closing, and 6 of those candles gives you a daily candle as well, so they fit with your time frame. Goran's just asked, I'm a day trader, which time frame is the best? Well, it's that old cliche, Goran. It's the one that fits your personality best. Lots of people, scalpers haven't got, that's wrong. I'm going to say I haven't got the patience. That's the wrong phrase. The wrong thing to say. Scalpers want to be able to do lots of trades very quickly and are happy with 3 or 4 pips a trade or 5 pips a trade, maximum 10 pips a trade, and they want to do lots and lots. They close at the end of the day and they're not interested in the news, not really interested in what's going on overnight, and they come back next day and they start again. Longer term traders are a bit more interested in holding it for longer, and it's all about personality type. So Goran, you really have to look at yourself in the mirror and see what time frame fits your personality. There's no point trying to be a scalper if you can't make these instant decisions, be able to be in and out very quickly, be able to decide that you're wrong and cut your losses. It doesn't fit most personalities. My personal money is 90% of it is traded on the end of day time frame. Okay, I do have an intraday strategy, and we'll talk about that on 1 hour and 4 hour time frames. But most of my trading, investing, almost my trading I should say, is done on the 1 hour on the daily time frame. You got it, because it fits my personality. Okay, and that's the key thing, Goran. Some systems work better at 1 hour time frames, at 15-minute time frames, but they're all much of a muchness, and it's the one that fits you, because as I said right at the beginning, this business is 80%, 90% psychological. It's not really about systems and charts and listening to people like me prattle on about the markets and what have you. It's all about you. It's all about getting your head around the markets and accepting that you lose, and you lose quite a bit. So you need to be looking at at least two different time frames. This is what time frames is all about. Or resolutions. If you're looking at some American sites, they call it resolutions, but time frames are resolutions. Define the dominant trend in the higher time frame and timing entries in the smaller time frame. So if you've got a strong resistance or a strong support in the 4 hour or the 1 hour or the 5 minutes or whatever it is you're trading, look at the lower time frames for entering, and it's making. You might make as much, but you don't lose as much either. It's confirming the turn sometimes. So you can have lots of action in the 5-minute chart, but the 1 hour chart hasn't actually triggered yet. But you're in and out on the 5-minute chart. So it's all about that. So you're using a top-down approach. So you use the higher time frame, and then you drill down. So the dominant trend, and then trade with the prevailing momentum. Okay, so that's the idea. So if the 1 hour chart looks like it's going up, but it hasn't confirmed yet on the 1 hour chart, try and use the 15-minute or the 5-minute to say, well, yeah, let's go long. I'm only going to go long because I know my higher time frame is in a strong upward trend, and vice versa. If it's in a strong downtrend, don't try and go against the trend. Or if you do go against the trend, just be aware that your targets need to be closer, because you're going against the prevailing higher time frames. And that's what I do all the time at the end of the day. I always look at the weekly and the monthly when I'm deciding to trade at the end of the day. And so you should be doing the same thing when you're trading intraday or whatever time frames you're trading. It's all about what the dominant trends, just to keep you on the right side, keep you a bit safer. Okay, so we tend to use the longest time frame for identifying these major SNR, these major, support and resistance levels. And sometimes if you're using an intermediate time frame, this either confirms the longer term analysis, and then we can use some pivot points within there, and then if you're using a third time frame, this can get you the entries, the signals, these pin bars that get you in the confirmation of what the higher time frames are doing. Okay. Again, going back to my personal trading, although I trade off the daily, I look at the weekly, but the strong one for me is the monthly. So when I'm talking about the higher time frame, when I'm taking my daily trades, I'm really more concentrating on the monthly rather than the weekly. But obviously, if all three are in the same direction, that's great. You know, that's as a with the trend a sort of trade. I get a lot of trends that trigger on my little system that are against the trend. It's a short trade on the daily, but the higher monthly is still going up, or it's still a strong monthly trend, because obviously the monthly trend takes a while to change. But it's still good enough to get me, you know, 100 pips sometimes, 150 pips sometimes, even against the higher time frame trend. But here, you know, if you're trading with the trend, all three are in the same direction. That's a comfort factor. That's really what you want to be looking for. So it's all about these pivot prices, pivot highs, pivot lows, and it's a very simple creation. You can see it all the time. If you can't, we'll come to some charts in a minute once I've run through the theory, and you'll see these turning points, these pivot highs. Call them what you like, but it's all about supply and demand, just like any other market. It's driven by buyers and sellers. If one's stronger, we're going up. If one's strong, if the other one's stronger, we're going down. So here on the chart, we tend to have, you know, 5 candles create this pivot point, or fractal highs. We sometimes have it. So here we go. We're going up in an uptrend. We've got a buy-in height here, no more buys. We've got a big tall wick, and then we start to move down. So candle 4 closed below the high and the low of candle 3 here, and then candle 5 confirmed that turn in the marketplace, in the trend. So we're going up, and then we roll over, we go down. So the wicks are higher, the bodies are higher here. Here the close is below this one, and this one closes below this one. Obviously the highs here close above there, and the lows close above these lows here. So we have this pivot high, and it really is as simple that when, you know, the price point at least one lower either side of the point. So here that is our close there. This one closed there, below there. This one closed below there. So we've got a little pivot point. We've got a little turn in the market by the looks of things, confirmed, because we've got 2 lower either side as well. So that's a nice strong one. That would create, if you use fractals, that would create the fractal high as well. So we've got lower highs either side of the high, the pivot high. Okay. And this is, did I jump on I think I jumped on chart slide too many. No. Okay. So here, this is what happens. We see this time and time again if we're in a trend. And remember, markets only trend about 70% of the time, whatever time frame you're looking at. But, you know, even so, this is what you're looking for, regardless of the time frames again. So here, price has moved up to a point. We've created a pivot high. We've gone up, we've gone up, gone up. We've rolled over and gone down. Here, we've gone down and created another. But this time here, we've probably created a pivot low here. So we're going up. The trend's up, okay? We don't know that yet at this point, at point 2 here. But point 3 and point 4 sort of suggest, we might be having a trend here. So we've got a little channel forming as well here. We've created these pivot highs here. So this has become this resistance level now becomes support as we've moved up to point 3. So we've turned over. This time we've turned around here when we moved up. Now we've turned around and then come back down, but we didn't come. We came back through our what was resistance level, but we hit a point there, and now we've turned around. So by the time we get to point 5 here, so 1, 2, 3, 4, 5, we've created a level here that we've broken through, and we've also suggested we may be a trend may be formed. The channel's forming there, isn't it? Once we got to point 5. So it's of interest now. We're probably in this. We'll look at this. We've seen these turns in these time frames. So now we get to point 6 here, or this is the next point on the trend. Now we've got 3 touches, so that becomes a trend. So the trend is now strong and developing, and we're off and running seriously. So we know that our next target level is this resistance level here. Sorry, when we come here, our first would be here, second would be up this point here, and when we've broken through it this time we retrace again, but the retracement again takes us back to this. What was resistance is now support. So here resistance becomes support, red becomes blue, resistance becomes support, red becomes blue as we turn back down here. So we've got a very strong trend now. We've got 4 touches on our line that we drew after 2 touches. There we go. So we possible there, 1, 2, that's strong. So that's it. We were expecting this turn. So even if we broke down through here, the strong probability of this is still going. So we'd be able to enter there again and take this higher. And so it is. That's simply how you draw trends on trending markets. The detail is in the lower time frames, these pivot points and these turns in the candle patterns forming there. Okay, so pivot low is simply the reverse of what we just done going up. So going up, we were looking for these points here, these pivot highs, pivot highs, pivot highs, and pivot lows, the reverse deep into the pivot area here, bounce from the support level, reverse. That's what we're looking for here. So just as pivot high was demand greater than supply, here we've got supply greater than demand, so we're going down, big sell off there, all the way down here. From here we got lower highs, lower lows forming, but we got price moves highs. We've turned around, so our low was here, wasn't quite sure there, but we closed here, we closed higher, then we closed here. Here we've closed higher, then we closed here, so we got this turn here, we got this pivot round. So we have, this time we have lower highs as we go down on either side of the pivot low. So either side of the pivot low, either the body of the candle or the wick, the point of the wick, it doesn't really matter, to be honest. Wick is obviously the extreme of the move. We've got lower highs, sorry, higher lows than the pivot low. So we've got this turning point where supply has exceeded demand. We've turned around and there's a bit more buyers in the market there. So pivot lows again. So just like we had before, this time we got a trend going down, looking support and resistance. So here we start to move here, we move down, but we reverse it. So this is our first support level. We don't know that at this point, do we, after this move? That's just something in my hand. We might have gone back up there, we might have gone sideways, but this is very artificial diagram, but it's just there for proving the point. Okay, so support and resistance levels, these key reversal points in the mark. So here we've got this moving, then we go the next big, leg 3 is a big move down. So we broke through what this we might have thought was this some sort of resistance level, but having had a big move there, we thought, oh well, this is going to reverse if we identify these pivot low here. We've gone up there, pivot high, we turned around, and it's likely to reverse back to this sort of level. So this is giving us some sort of comfort now. And then when it turns around, when we've got 1, 2, 3, 4, the fifth turn or the fifth leg started, we're now suggesting, oh, this is certainly moving down. So we've started up here and we're down here. We're sort of confirming that we're in here because this resistance to move back up has been broken again. So we're back in this here, and our reverse this time wasn't as big. And our move down wasn't as big this time because we had a big one there, and our reverse was much weaker as well. So we got 3 points now on our trend. Our trends form, we haven't got to our resistance here, so we're looking to move down. Where's our next target? Well, our lowest point at that point was the blue line, and then we break it on the next leg down, so that was really a target. Now we move around, we're going to reverse again. Where we're going to reverse? Well, we'll probably reverse to probably reverse this area. Oh, we have. And the trend becomes very strong because we now have 4 touches on that trend line. More touches on trend, the stronger the trend becomes. So there we go, that's the reverse in the other way. So moving up or moving down, these are the sort of things we're looking for. Okay, so in summary, when in uptrends, when the price pulls back to a former daily, well, it says daily here, but it doesn't matter, a previous higher time frame pivot high, look to close to this level of this pivot. Look for intraday buy signals because we've got an uptrend forming, we've got support. In downtrends, it's the other way around. When the price retraces to the daily low pivot, you look to sell close to these pivot points. So we're looking for sell signals to move down because you're with the higher time frame downtrend. Okay, and really it is as simple as that. So but it's all about sticking to your plan. So whatever the time, this is from my previous slides when I talk about daily. This could be 1 hour, 4 hour, whatever it could be 15 minutes if you're trading a 1 minute time frame. So you're looking for the high for your lower time frame to confirm a trend that's forming. So the big question is obviously, well, how do you know which way we're trending? Well, again, it depends on the time frame that you're trading, what your higher time frame is, and you've got to stick to the rules. Okay, so as I said, if you're the higher up the time frames you go, the stronger these support and resistance levels are. The issue with that is obviously the higher the time frame, the longer and higher the stop loss and the take profit will be. So the bigger the profit you'll make, the potentially the bigger the loss you'll make. Can you cope with that, both from a financial point of view and from a patience point of view? Again, if you're wanting to trade intraday timeframes, there's no point in looking at what the weekly time frame's doing, because you're only interested in the 1 hour and the 15-minute. So the weekly time frame is something somewhat irrelevant for your actual approach. So it's all about you. Okay, that's the main thing I want to reiterate, and because this works on all time frames. Okay, and I've got some I was going to show you some examples here, but somebody yesterday, actually I'll come back to this because that slide's in the wrong place. Where's my charts gone? So this is just this is a moving graphic of what we just had a look at. So here we go, we're going up, support becomes resistance, resistance becomes support. Next time, price pulls back to the support lines that we've identified in our higher time frame. We've touched it again. Trends formed. Resistance is now support. So that's a nice entry because we're looking to get to this sort of this pivot area here. So we've got this pivot low formed, and off we go. So we take that one as well. So, and it's repeated and repeated a few times. So we've broken higher. Our target here could have been here. Because it was our previous high, our previous turning point. We didn't get there immediately, but that would have been another entry there because we've come back to the trend. That would have confirmed that and explains why this leg is much stronger than these two here, because it's lots of buys from there, and there would have been there to take that higher. Okay, and same we go. This is now, we'd expect this. That's given us very good entry points if we know that our 4-hour time frame on this daily time trend here, or a 1-hour trend, a 1-hour target gets to this daily level. So it's like another little waiting for that time we turn, and off we go again. So it's long, and it's the same with in our short entries. Okay, so it's exactly the same as it reversed when we're going down. Okay, hope that made sense. I've got some examples here, but they're a bit complicated, and let me just bring in. It might be easier if I demonstrate this on some live charts. These examples are a bit old. I keep meaning to replace them. So yeah, a bit complicated. But basically, the going short is exactly the same time frame when we look at. So it works both up and down if we have a trending market. Okay, so let's bring in some live charts and see what we've got here. Okay, let's see if we can prove the theory in real time for you. So, except my MC4 doesn't want to play ball. What's happened to my mouse? Has disappeared as well. Slowly. Right, let's get this. Why doesn't that want to fill my screen? Doesn't like being on this screen for some reason. What's happened? Oh, come on. Right. For some reason, I didn't want to do that. Right, just bear with me a second. Right, don't know why that didn't work, but anyway. Right, let's just see what we can find here. Okay, so let's start at right. Okay, so we got some 1-hour charts here. These are the main currency crosses. Some lines on here from earlier, but let's have a look. Let's take all these lines off and just clean things up. Object list. So let's just clean all these off for you. Delete. Close. Right. So let's start at this time frame. So what can we see here? So this is the 1-hour chart, euro dollar. Okay, we got a strong. So the red line is strong resistance at 200 at the 200 period. So if the intraday, any intraday charts up to here, that would be strong resistance. We've also got these moving averages here forming a nice downtrend here, as we can see here. So if we just that from what we've just looked at on the charts, that's a very strong downtrend, isn't it, in the 1 hour charts. Okay, so that blue line I've just put on there is a strong downtrend currently developing on the 1 hour chart. Hope you all agree with that. Yes, can everybody see that? Let's just zoom in a bit. Okay, so that's a 1 hour strong downtrend from whatever it was this morning, euro dollars in a strong downtrend. So how does that help us with other time frames? So after this candle's completed here, we can see that's a clear strong downtrend. But how does that help us in the lower time frame? So let's see what that blue line looks like in the 15 minutes. So here we have some classic entries because we've developed that at let me just go back. So this was looking like it was short by the completion of, why isn't this working properly? Let me pull this up. That's zoomed it right. So hopefully you can all see this, and it's not. Why does this happen to me when I'm using live charts? The yellow and blue lines on here are the 5 and 9 EMAs, Mansour. I'll come on to those in a minute, but I just want to demonstrate multiple time frame analysis first. Right, okay, so let's say we didn't confirm this downtrend until we closed here, and this was the close of the 11 o'clock candle at 12 o'clock. Yes, we could have got it, we could see it was clearly moving down on that hour, but on the higher time frames we were pretty clear that that was weak because it was under the 200 period. So there we know we're weak because we've closed under the 20 period moving average here, and we've also got this downtrend confirmed. So during this hour would be some nice entries on the lower time frame. So during the 11 to 12 time period would have been some, looks like some nice and safe entries at the lower time frame. So let's just do that. Let's just put on a, so the that would be an absolute classic one there, 11:40, 10:45 during that 1 hour time frame. So we've got our trend developed there. So we've got a pin bar there. Not sure what was going on, but we're weak. We're under the. We touched the trend, the higher time frame, the 1 hour. John said, yes, I'm going to come to the traders board in a minute, or during this session. Don't worry. So the pin bar here touched the 1 hour trend, so that's a strong resistance, so we know we can get in here. So we would have entered, so your entry could very easily have been the close of that pin bar there, because we know we've got the downward trend. Our entry would have been the close, even though it's closed up on this time frame, it's still weak on this time frame, so it's under some moving averages as well, at 123.74. So you could have entered there, short position. Your target could have been simple 10 pips on the 15-minute time frame there, and obviously that would have been taken out very nicely in the next downtrend. But you know the trend is still down because during that time frame there we touched that again. So again you could have entered there on the completion of the 15-minute and taken another 10 pips out of there. What's that? 23.66 or 23.56 would have taken you down, and it, you know, even so that would have been your entry there. I hope you can all see that. It's because we've touched this. So weak again, and the trend is continuing. The trend's extending. The other thing that would have kept you in this is the strong trend line which hasn't been broken. So you could have added to your short positions here. And we're also, the other key thing on this chart, my intraday charts, is the blue and the yellow lines. These are the 5 and 9 period EMAs. Okay, 5 and 9 period EMAs I use on intraday charts as well. And so again you would have got in here and taken that down, and again we've returned, we're way above that, so that would have been, not quite sure what was going on there, it's not the confirmation, but again it's under the 9, under the 5. The trend's nicely developed now, so again you could have taken another entry here. It's starting to weaken here because these, so our next entry could have been there, or indeed you could have added to this move because there's nothing to say get out yet as you move your stop loss down. Your stop loss, you know, let's say we got in here, our stop loss would have been back above the previous. Where's the next strong resistance? Well, the strong resistance is here, the midpoint, the moving average, the Bollinger Band. So we could have had our stop loss up there on this particular one. That's what also happens when I try to do things live. It doesn't like it. Hopefully you've got my point here. So okay, we've identified the higher time frame trend, and the lower time frames have just bounced into it. And you know, you could have gone, if you wanted more trades, you could have done the same thing here on the 5-minute chart. So you've had an end. You would have had an end. This is the, remember, the blue line is the strong downtrend we identified at about 10 o'clock, 11 o'clock. On the 1 hour chart. Let's just go back to that again. Strong downtrend, you know, confirmed sort of during here, these certainly here at the close of this time frame there, but as we've just seen on the 15 minute and the 5 minute, we get lots of turning points as we hit the trend. So the turning point there, fractal high, entry there, entry there, entry one, entry there. See if I can't draw on this, can I, with pen. So entry 1 there, entry 2 there. This is 5 minutes, remember, and that was entry 3 on our 5 minute, as well as our 15-minute one we first identified. We got another one there on the 5 minute, very still under this strong moving average, even on the 5 minute chart. We've fallen away, so you could just trade the trend there. You could just add to your position as we go down. We're under the 5 and the 9. The blue line here is the 5-period EMA, and regardless again of the time frames, sometimes I use that as a proxy for the price. So instead of waiting for candles to close or trading with candles, sometimes I like the rule is if we close below the 5-period, you'd only ever take short positions. If you close above the 5-period, look at potential long positions. But again, depending on which one you're going to use as your rule. Here, we're clearly in a downtrend. The trend, the Bollinger, the moving averages are all nicely aligned. So we got the 20, the 9, and the 5. So the trend is with you. The trend is down. So even here, when we closed, in fact, we didn't actually close. Even here, when we on the 5, where we closed above the 5 and the 10, we were still up below the 20. So we'd still be questioning that. And remember, we'd also had a big entry on the 15-minute here as well, so we'd expect that sort of turn back in the 5-minute because we'd entered on the 15 there. So again, trend is very much with you there. So we're following that down. We're taking more trades as we are adding to our positions as we go down. What's suggesting we may turn? Well, for the first time, we close. This is with the heads up. For the first time at 13:05, we close above the 5 and the 9 in all this time. So all from if we traded that, our first position was back. No, it wasn't back there. It was back here, wasn't it? So from 10:45 all the way to 1 o'clock, that's our first heads up. We either close our short positions or look to perhaps has the trend turned? Well, no, it hasn't, has it? It looks like it might be trending now. Remember the deep move we identified earlier? Well, it looks first time we've been over this line on this 5-minute trend. So the trend may be coming to an end. The trend we identified this morning may be turning. So we're first time 13, 13:35. You see it live now. We're actually breaking over this trend line. We're also the heads up first though is the break over the 20 period. So this has been our first heads up. Sorry, not first heads up. First heads up was this one, wasn't it? We closed over the 5 and the 9. And we held it for 10-15 minutes. We had a dip down just to test it. We're going sideways. And that one there, that 13:30, so again that's a 15-minute candle closing, also a 30-minute candle closing above this 20-period moving average on this 5-minute chart. Also, the moving averages are crossing here as well. So this looks like a long position here on the 5-minute, giving you a heads up on the for the higher time frames, the 15-minute and the 1 hour, that this trend we identified up on the 1 hour chart maybe coming to an end, but we don't know really, because on the 1 hour chart we're still banging into it. Okay, and honestly guys, it's as simple as that. You just see me do that absolutely live, okay, on these time frames. So choose your time frame, choose your pair, and away you go. We could do the but you need to have some trending. It's no good, over the Asian session there's nothing going on, is there? We're going very much in a sideways, so you'd want to use your oscillators to help you with that sort of trading. Okay, because we're going sideways. Here we got the European session, deep liquidity, something moving on there. So even, I say, even on those time frames, it's all about using the appropriate ones. And the other key, the other key thing, John. All right, I've just read Jonathan's note. Yes, I will talk about Traders Board, Jonathan, and you can watch the recording later. Yes. So so that's just, I mean, that's one that's worked. Obviously, all these things, none of them work all the time, and that's the key thing. But you're looking for strong trends. So here we just done pound will be a very, very similar setup because we've got a move down, a strong move down. So again, if we zoomed in, but again, you just got to make it fit, and don't try and make trades fit your time frame or fit your how long you've got to be able to look and stare at charts. But here again, clearly this morning, again, you don't have to be a trader to see this. Your average school child can see that that's going down, isn't it? This one's gone down strongly this morning, and it seems to have hit some sort of floor. So again, a bit like the Euro chart, we've gone down. Let's just see if that we'd have a very similar setup with the pound here. Sorry, I apologise about my live or this demo account. It's not playing ball at all. So again, this was a strong trend we've just put on the 1 hour chart, and we've burst out of it there. So we might have been stopped out, but we can see the trend is still down because we're under this. What's this one? This one's a 15-minute. Did I draw that? Let me see if I drew that line. So I didn't draw that line very well, did I? Let's get rid of that. So much that trend line wasn't close, because that's the other key thing. You want to be trend line, delete. I was talking and drawing at the same time, which wasn't great. So the line is really from there, and it would have again confirmed on this, it's 12 o'clock one. Let's just try and draw that a wee bit better. Doesn't want to do it, does it? Zoom out. So on the 50 we'd have pounced out of it again here. So entry would have been here, short. That's a bad trend line I've drawn there, but anyway, hopefully you can see the point. The point is, we've got a trend developed on the higher time frame. The lower time frames have come to this resistance, the trend line, and we've gone down. We just added to it, and because here we've got a strong trend because we've crossed here in the 15-minute. That could have been yet another entry there using a different moving average crossing technique. That's a strong entry there on that 15-minute chart there, to whatever time that was. And again, can you see that one? That's 9:45. We've been up there. We've rejected the 200 period. We've closed below the 20 period. The green line, the blue and the yellow have crossed. The 5 and the 9 EMAs have crossed. That's a strong entry there on this 15-minute time frame, and that target could have easily been just a few pips, but the trend has developed quite significantly. 12 pips there on a 15-minute, very, very comfortable short, 12 pips there, and you would have got back in again here as we've rejected, or indeed that would have been your entry point again, that 11 o'clock close candle, because we've rejected the trend line again. We tried to pop over it, but we didn't. See how that we had an aggressive move down in the 15-minute. We retraced also, but we didn't break these key moving averages here. On that, we tried to, couldn't get above the 9, got over the 5, but we couldn't get over the 9, and then the next candle was still, we closed low again. So the trend was continued because we rejected that 1 hour trend line, that blue line we put in, and off we went again. Strong trend developing then. So you would have added and added and added, and again, just like the euro, we've hit a floor here at 138.73 here on the 15-minute chart. Seems to have turned around for the last hour. We can't get any lower. That's a key, 15-minute chart. That's quite a support level there. So if you were drilling down to the 1 minute and the 5-minute chart, that would be a support level. So here on the 15-minute, it looks to be turning around. We're over the 5 period for the 5 period moving average here now as we talk live. for the first time since 10:15 this morning, 10:45 this morning. So if this one closes over the 9, interesting, because it's a big candle, it's engulfed all of those. So that for me is looking like a buy here at 139, because it's a psychological number, 139. It's closing, what time is it? It's 45. So this one's just closing now. It's closed above the 5, it's closed above the 9, and it's closed around this psychological 139 level, and it's a big candle that's engulfed the previous 1, 2, 3, 4.5 candles. That's a strong uptick for cable here on this 15-minute chart. So let's see how this closes. It should be closing now. Yeah. So we've closed just above it. So we could expect some sort of retrace in the next 15 minutes, but that's a indicator, perhaps, that this floor has now been formed. So this is our first heads up for our higher time frames. So this is saying, oh, this trend we've had all morning going down may be coming to an end. So what does that look like on the hour? But on the hour chart, you see, we're still short. It's still short, but 15 minutes is saying, well, hang on a minute, this may be coming to an end. So instead of waiting for another 15 minutes for this candle to complete, which will still say it's probably short because it won't be over this blue line and the yellow line, so on the higher time frames it's still short, you could still use this 15-minute potentially to get a little bit of momentum up into this space here. Remember, it's all the time frames you trade are all relevant. No audio, somebody said. No audio. Does anybody else not hear me? It looks like it's okay. Ola Ken. Can everybody else hear me? So anyway, we'll see how that one develops. So let's just do that again. So the higher time frame here, the 1 hour, is still saying we're short because we've got this trend here. We're under the 5, we're under the 9, and we're way under the 20. But the 15-minute may be giving us our first heads up that we may be turning around. And if we look at that point, the point where we stopped here at it was 139, wasn't it? So it's perhaps the stronger support is down here at 138.73 on the 1 hour. So 15-minute has it. So it looks like it may be rejecting it. So it's not, it's not ticking the box again. So it's perhaps again return to trend. But wait until this one's closed. Again, if you've got to take this one short, you can see there's some clear support here at this 138.73 level on the 15-minute, because it's also, like we just saying on the 1 hour, because it's last 15 minutes, it's also the 1 hour support, and then the next support is back down here. So trade it that fits your time frames. Okay, so let's assume we'd gone long here because this was just over, looked strong, big candle. You'd expect this sort of retrace on this particular time frame, so that you shouldn't be panicking too much at this point, but let's see where we go. But obviously if you're trading a 1 hour time frame, we're still short in that sense. So it's all about timing. It's all about what fits with you best. Okay, and if we go so that's 1 hour and 50 in the 15 minutes. So if we go up to we look at the 4 hour, obviously that strong support is still a support area. It's 137.37 because it comes from this sort of area before, but that's even stronger support down there at that one where we got to this last night. 138.56 is the 4 hour key support level. So again on the 4 hour you can see we're still short. That's still a short trade, isn't it? The moving averages crossed there and they've been going down ever since. Tried to tick up, they've sort of under the 20, under the 5, 9 still, and under the 9. We got over the 9, but we got over the 5 a few times here, but not greatly. We went back under it. Got here, it looked a bit better, looked like we were going up, but we were capped by the 9 there. 9's held caps. So again, if you're a 4 hour trader, that's another short position because you closed there. Your stop loss, you could trail your stop loss with perhaps your 9 moving average, and that's still moving down. We've already tested our 1 hour support here at 138.73, and our next support area is down at 138.56 on that higher time frame. But let's go back to our 15-minute. So bit of retracement there. So are we going to get a little bit of an up move? We don't know, but that's certainly what that 15 minutes may be suggesting. Okay, and that's what you do. Okay, There is no people that keep asking what's the best time frame to trade. It's the time frames that fit with you. How long can you sit and watch these? How much patience have you got? You know, as I said at the beginning, if you're only trading, the beauty of the 4-hour chart, like some of you said at the beginning, is that you don't need to look at them very often. Okay, so you come in and check every 4 hours. So what's happened? Whoa, look at that! It's a big short position. We're all the way down there. That's looking weak, but you know, again, you would have to look at your where's your higher time frame. So where does that fit? Where does that big candle fit in the daily time frame? Well, it was there. So hang on a minute, where are we? I've lost which one I'm talking about. So that one there, that line there was that one. So that's a big candle down if you come in then. So, but on the daily, it's only that one there. We saw, look at that, it's broken on the close of that day. It closed below the key moving average, which is why I've gone down again today. So on the daily, it's weak. So although the 4-hour would have said entry there, you're out of the money, because if you've got in at the close of that candle, it's gone against you, but it's still maintained it. But again, your entry would have, you could have added to it as we've gone up and hit this. This has given you added confidence that perhaps that was going to retrace, but it run out of steam quite quickly. So it's still weighing down, cables weighing down here on this 4-hour chart. Okay, and that's all you do. You just read it appropriately. Right, one of the key things, or one of the issues that many people get wrong, is they fiddle about. They flip from time frame to time frame. You need to decide and stick to the time frames and stick to the rules, stick to the ATR targets that you want to stick to. Okay, don't suddenly start looking at trying to trade the 4-hour time frame if you're not looking at what the weekly and the monthly is doing, or the 5-minute was too volatile for you. There was too much action going on, and so you move up to the higher time frames. That's fine, but get your system and stick to what you want to do. Okay, so we were suggesting we were going long on the 50. That doesn't look like that's worked out. So the break of the 9 wasn't significant, just like it didn't break it significantly there. We may have a repeat of this, and this should add to confirm the down move on that one. So, which is still in line with the higher time frame 1-hour charts as we've got up here now. This our trend line here we drove from this morning. Okay, I hope that made sense. Are there any questions? I hope I haven't confused you either too much, but are there any questions about trading multiple time frames? You've got to find the time frames that fit your personality. I can't tell you what that is. You've got to decide that, and then B, stick to your guns and stick to your system when you're approaching multiple time frames. But it's all about finding these pivot points, these turns in the trend. As you can see here, what's the one? This is a 1 hour, and this has been down, hasn't it? The 1-hour chart down, big down there, big turnaround. But the general trend is down. So the higher time frame is definitely down. Cable. From this high here and from the second. So all week we've been strongly down a pound USD. Okay, so let's just take that out, and I want to go to I want you to bring in Jonathan asked me yesterday to have a look at, in the last 10 minutes I just want to have a look at the traders board, which he asked for yesterday. I can't remember where the slide was on. That's not going to work, is it? So traders board. All traders board is a heads up of the relative strength of these different currencies. So okay, so this is our traders board under the here's our website. We are here under tools, the analysis page, lots and lots of analysis, and within the analysis page is the traders board. And what the traders board shows you is the relative strength of the 8 major currencies. Oh, have we got, yes, 8 major currencies we've got in here against each other. Okay, so it's a quick graphical indicator of what's going on, and I really like it. It's very simple. So clearly, just looking at this, ladies and gentlemen, what's the strongest currency on currently, would you say, against its 7 other neighbours? What's the strongest currency that their traders board is suggesting at the moment? This is current, but it's from data from midnight last night. Tell me what's the strongest. Bruce top of the class, Lorato top of the class. Anybody else? Come on, there must be lots of you in here. There's come on, you should be able to see these things now. Don't be shy. What would you say is the strongest currency from what you can see on the chart in front of you? For some reason only 2 of you have answered, but both of you are correct. Oh, yen, clearly, yeah, JPY. Why is it the strongest? Well, look, it's positive against all its neighbours. Pound's okay. That's a bit weak, and particularly weak against the yen. That's what we know, because we can see that. We can see that here. New Zealand's, Aussie's weak across the board. Not very weak, but weak across the board. Raj, why do you say the dollar's the strongest currency? I see your theory, Raj, but really, it's the yen that's moved the most. Look at the percentage move, nearly 0.8% against the Aussie, 0.8% against the pound, 0.7 against the Swiss, 0.7 against the New Zealand. It's really is the movement, the momentum is with the yen. Yes, the dollar's doing okay, but it, relative percentage-wise moves, it's much smaller than the yen. Obviously, some other currencies are a bit mixed. CAD here, bit up, bit down. Mostly not a lot going on. Swiss mostly down. New Zealand mostly down from having a really good strong day. Okay, because it's starting to. I'm talking about that from what the heads-up traders board is telling you, Raj. That's all. I'm not talking about any support or resistance levels. So this is what the traders board gives you. You can also take it higher. What's the longer trend? Longer trend might be a wee bit different. Okay. Well, no, it isn't. Over the last 5 days, we've got a weak pound, and then we just seen that when we were looking at the cable. A mixed dollar, mixed euro, but a strong yen and a strong New Zealand. It's dipped down a bit against the yen because the yen. So again, that shows you the two strong candidates: the New Zealand dollar and the Japanese yen. But the strongest of them all is the Japanese yen, because look here, against the pound, it's moved 2.5% in the last 5 days. That's a big move. Okay, so. And that's what you would expect given what's been going on in the last few days. We've had this big sell-off in equities, and so risk off. What benefits? Well, significantly benefits is usually the dollar, is usually the yen, and that's what's happened there. Interestingly, the Swiss franc hasn't strengthened. That should have strengthened as well if this equity sell-off was going to keep running, or that it was going to run into going to influence the forex market, and it hasn't. So that's a bit of a heads up that the fundamentals still remain quite strong for the equity markets. But they said that about the housing market before the 2007 crash, didn't they? So take it all with a pinch of salt. But here, over 5 days, the yen still remains the stronger, and that's how sometimes what to trade. If you've got no idea what's trading, it also the beauty of this as well. Sometimes it keeps you out of taking trades as well. Sometimes, not always. So for instance, if you've got a mixed bag of what's going on, like your dollar's actually quite strong, hasn't it? It's changed. I haven't got Swiss is up and down, so be careful about trading it, okay, because it's a bit up and down. The CAD's a bit not really moving much each way. You'd expect this sort of this is today as well, so the New Zealand dollar's quietened down quite significantly from yesterday's move, because tonight the Central Bank of New Zealand make their rate announcement, the statement, so this can help you as well. So this is data taken from our service. This is Hot Forex clients. This chart over here as well, I know a lot of you use this as well, these client positions. This is a composite. This is data taken from lots of brokers that feed in to FX Street, the guys that are providing this data for us here. So all the brokers that feed into FX Street, they're saying 60% now are selling gold and 40% are long gold. So red 60%, green 40%. The issue with all of this data, let me say this very, very clearly, the issue with all of this data, you have no idea about volume, how big these positions are. If these are only a few cent positions, it doesn't really matter, does it? If you suddenly then got somebody dealing tens of thousands of dollars. So take all of this data with a pinch of salt, because it's all relative to volume, and you don't know how many trades, how many people or what degree of volume is creating this piece of data. So that's a trader's board. It's a really nice, powerful. There's all sorts of other things on here. You've got volumes as well. It shows you what you guys are actually trading. So typically this very rarely changes. So usually it's a big wedge for the euro, big wedge for the cable, a big wedge for the yen. Normally yen's actually quite small there. No, there it is, yen. Aussie's got a lot of interest today, and this is New Zealand dollar's been quite interesting as well, or had a lot of interest simply because the RBNZ meet tonight, pound, Bank of England meet tomorrow, and gold's obviously another one that's everybody likes trading as well. So this is what our traders, a trading volume of trades that are going through. So that's the traders board. Jonathan, who actually specifically asked for it, he's not actually here. So Jonathan, email me if you got any queries on that as well. So that was today's multi-time frame analysis webinar. I hope you found it useful. Tomorrow's webinar, actually let's just skip through this quickly, is all about where are we? This week. Oops, too far. It's all about momentum trading. So a bit like trending, it's momentum. You're going with the flow. You're going with where the market's going. Otto's going to talk about that tomorrow, and there's some presumably he's going to be talking about some key momentum indicators as well to help you with that as well. That's tomorrow. Next week we've got obviously live analysis on every Tuesday, 20th and the 14th. MACD. Trading with the news with Otto again, and then a key webinar. If you're new, if you're experienced, if you're struggling with your trades, mind games. This business is psychological. Have a look at this at the 21st. There's lots of recordings on the website. Have a look at them. But join me live on the 21st, where I'll go through the big element of psychology. Bollinger Bands, do they work? Yes, of course they do. Otto, you knew that. That's a very Freudian question there. Bollinger Bands are great for trading, and then Andrea finishes the month with a real powerful tool, the Auto Charts tool, which we've got, which is great for identifying volatility, good for getting in at the right time as well. Nice little package. I really like Auto Charts as well. Can you, Ulrich, that is the whole point. Ulrich's asked a question here. Can you long the strongest pair against the weakest? Absolutely, that's the point, Ulrich, sorry. That's what trading's all about. Just like I said on that. Let me go back to this chart. I should take all these charts off. It's on a bit. This one here. That's what it's all about. When you're trading currencies, it's all about the difference between the two currencies, because you're trading the pair. So if you've got a strong currency, like we know the yen is strong, and we've got a weak currency, whatever the weakest one was up there, have a look at that. Look where that's going, or has it already ran its course? That's the point, Ulrich. Because if you've got something strong on one side and something weak on another side, it's like the kids' playground, the seesaw. If you've got something strong on one side, it's going to make his end go down, isn't it? And in trading terms, it's the other way around. We want it to go long, but that's the idea. If somebody's weak, it's not going to be able to deal with a strong weight on the other side. So we're only going to go in one direction. It's going to go. That seesaw is going to go down where the heavy guy is, isn't it? It's the reverse in currency. Obviously, if we've got a strong currency, it's only going to go in one direction, or it should only go in one direction. That's why I like it. Okay. No problem. Thank you, Ulch. Sorry, I'm obviously pronouncing your name incorrectly, aren't I? I apologise for that. So thanks, everybody, for your time. Any questions, please email me at hotforex.com. Let me just run through this again. And join us on Facebook. Oops, gone too far. There we go. There's our analysis page. It's all written up on there. Email us at webinars@hotforex.com, and friend me at on Facebook as well. Stuart Hotforex Cowell. There's lots of stuff put on there. I put that 1 hour crossing moving average strategy on there quite a lot as well, because that works quite well as well for us as well. Okay, I sent you a friend request. Okay, I'll check if you're on there, and I'll try and find you. Okay, if not, send me another one. Okay, all the best, everybody, and we'll see you again next time. Take care. Join Otto tomorrow for some momentum trading. Take care. Bye bye.